All right, y'all. Welcome to the next session of the course. I am super excited to be going through common trading patterns and the breakout strategy. Now, up front, I must let you all know that I am not a breakout trader. Although it is possible to trade these patterns using Market Cipher for Confluence, it's not my preferred style. And what I'm going to do in this session is I'm going to go through the common trading patterns. I'm going to show you how to trade these patterns, and I think more importantly, I'm going to show you how to trade these patterns while they are forming. Now, what exactly are trading patterns? If you're totally new and you've never heard of this before, what are trading patterns? Patterns are the distinctive formations created by the price action of any asset pair. A pattern can be identified by a line that connects common price points, such as closing prices or highs or lows during a specific period of time. Traders look for these patterns as a way to anticipate future price movement. Here are some examples of some common patterns. The ascending triangle. Okay, the ascending triangle is usually a bearish pattern that will break out upward when price gets to the last 26% of the triangle, known as the apex. To draw this pattern, you need to place a horizontal line, a resistance line at the top, and a slanted line as support on the bottom. So, if we were going to trade a descending triangle or an ascending triangle, we would want to find price moving in a way where we could draw a line like this and then a straight line like this, and we would want to see price trading in a way where it goes from the bottom to the top, to the bottom, to the top, to the bottom, to the top, to the bottom, to the top. And what happens when it gets to the last 26% of that triangle, called the apex? It will break out. Usually this is a bullish pattern, meaning it will break out upwards, and the way we set our take profit is we will take a line from the bottom to the top, and we will project that like this. Okay? Some people do it like that. Some people do it like this from the top of the triangle. And what happens is when the price breaks out of the pattern like this, we enter a trade. Okay, we enter a trade, set our long position right here at the breakout, and we set our take profit at the top of this trend line. We set our stop loss below. And here's the thing, and before I get into more patterns, I must say it's always best if you're trading a pattern for the best, most high probability setups, you want to wait for the breakout, the retest, and then enter long. Because what this does is it's showing you that there's confirmation that what used to be resistance is now being respected as support. Okay, that's very important because, you don't know if this is a breakout or a fake out unless we come back down to this level and bounce off of it, showing as support. This is the best way to enter the trade. I'm sure you're familiar with these types of trades. If you spent any time researching technical analysis, you're familiar with these types of things, right? This is how we would trade an ascending triangle. We can find these all over the place. We can find them all over the place. Let's see if we can find one. Just recently, I remember we had a triangle that broke out. Yeah, here we go. It broke down, actually, this triangle. Something like this, okay? Now, let's take a look at what we have here. So this was not an ascending triangle. This is what's called a symmetrical triangle, where you have two sloping lines. But I just want to do this as an example. What we're doing in here is we're waiting for this thing to break out, and when it does break out, the way we're going to set our take profit is by taking from the high to the low and moving it like this, okay? And basically that's how we set our take profit. And you can see we pretty much hit that pretty well. This would just be a nice 1.75% move right here. Notice what happens when we break up. You could have said, okay, we're breaking out, let's go long, but what happens? We fall right back through. Down here, look at what happens, right? We fall through, and then we get a retest, and then we continue down. You guys see the difference there? This is the 3-minute time frame. But you can clearly see that we fall through, we come back, we fall through, we come back, and we get the retest, right? On the 1 minute time frame, it's even more clear. On the 1 minute time frame, we fall through, we come back, retest, and then we keep on retesting, unable to get through, and then we drop. Okay, so you would really want to enter this trade at the retest, which happens, you could say right here, as opposed to the top of the triangle. We never get the retest, right? We break out and we fall right back through. You want to wait for that retest. Some people might want to wait for something more like this. You wouldn't want to do this on a lower time frame. This is good enough on a low time frame. On a high time frame, maybe wait for something like that. It depends on what market cipher is telling you. But anyway, I digress. Let me get back into the trading patterns, and then we're going to look through some examples, and then I'm going to show you how to trade these patterns while they're actually forming, so you don't just have to wait for the breakout. Okay, so we have the ascending triangle, which usually breaks up bullish. This is classified by a straight top line and a slanting bottom line. Then we have a descending triangle, just the opposite. We have a slanting downward top line and a horizontal support line. So a slanting downwards resistance and a horizontal support. These things tend to break downwards, and the way you set your take profit, again, is you just draw a line from the top of the structure to the bottom of the structure and drag it down, okay? And you're going to set your take profit down here. Then we have a symmetrical triangle. These are neutral, okay? These will break either up or down. And you can see here, this is exactly what I was showing on the screen before, where we take the length of the triangle and we put it from the breakdown, and that's our take profit. You're not always going to hit your take profit with these guys, but in general, I like to wait for the retest. I like to wait for the retest. Some people don't. It's up to you. But next we have a flag. A bull flag and a bear flag is basically where price does something like this. Let me see if I can find a good example of a bull flag or a bear flag, because we get them all the time. Yeah, this is a great example of a bull flag, a bear flag. A flag is where price makes a very impulsive move and then starts trading in a channel. Okay, makes a very impulsive move, and then it starts trading in a channel that is in the opposite direction of the initial impulse. The way we trade the flag is when we see, this is called the reason it's called a flag is because it looks like a flag, right? This is the flagpole, this is the flag, and the way we set our take profit is we just take the flagpole, we copy and paste it, and we drag it from the breakdown of the flag, and that's where we set our final take profit. And you can see pretty much, well, I mean, if you had stayed in the trade long enough, it would have gotten hit. But pretty much, it does get hit down here, our final take profit of this bear flag. So, this would have been a really nice move of about, 3%. And again, this is the 1 minute time frame that we're finding this on. Now, a bull flag would be just the opposite. Let's see if we can find a bull flag for y'all. A bull flag is where we have an impulsive move to the upside, then we start trading in a channel that goes down a little bit, and usually that will break up in another move to the upside. Let me see if I can find a good bull flag. They're easy to spot, but they don't come up too often, right? They're easy to spot, but they don't come up too often. And so that's why I'm going to be teaching you multiple patterns, and also different ways to trade the patterns while they're actually forming. I think that's the most important thing, is to learn how to trade these patterns while they are actually forming. Because if you're waiting around all day for a pattern to form, you might not get a trade that day. I can't find any bull flags in recent history. But, oh, here's one. Here's a great example of a bull flag. So we have our initial impulse up, right? Then we have our parallel channel coming down like this. Okay, that was actually kind of badly drawn, coming down like this. As soon as we break out of the channel, what are we going to do? We're going to take our flagpole, copy and paste it, and put it on the top of the flag, and this would be our final take profit. And you can see that we don't actually hit our final take profit. We actually do not hit our final take profit with this one, guys. We get maybe about halfway up the flagpole, to about here, and then we come back down. So just keep in mind that even when you're trading these things, they might not always give you the full move, but this still is a 7.5% move. Technically, you could have stayed in here for almost 9% move. This is a flag where you have a quick impulse, and then you're trading in a channel in the opposite direction of the impulse, and then when the channel breaks out, you set your take profit up at the same length of the flagpole. Okay. We have wedges. Wedges are awesome. Okay, a wedge is a tightening of the price action between two trend lines. It can either be a rising wedge or a falling wedge. Okay, falling wedges are bullish. Rising wedges are bearish. So if you see a falling wedge, and let me just show you guys some real examples of these things here. Let me remove all these drawings here. Let's go to the 4-hour time frame, and let's take a look at a falling wedge. Okay, a falling wedge. Find one on the screen here. Here we go. This is a falling wedge right here, where you've got price. No, I'm sorry. This is not actually a wedge. Hang on. Let me find first. We'll find a rising wedge. Rising wedge is real bearish, and I know for certain we have one. It was a real big one that we traded for a long time. It was this thing right here, where we had this kind of pattern going on. We had a rising wedge like this. Okay, you can see that over time we're squeezing in, and as time goes on, the price is getting higher, but it's squeezing into a tip. This is called a rising wedge. Again, the way we set our take profit with the rising wedge, from the top to the bottom, and then we at the breakdown we set our take profit right here, and this rising wedge played out absolutely perfectly down to $42,000. This is a great example of a rising wedge. A falling wedge is just the opposite, where you have price kind of coming down like this. See, it's just the opposite. The way you set your take profit is from the low to the high, and then look at that, boom, we come up, we hit our take profit. This is a rising wedge. This is a falling wedge. Falling wedges are bullish. Rising wedges are bearish. Again, this is the picture of one. What else do we have here? We have the cup and handle pattern, a well-known continuation pattern where basically you see price will come up, form a little cup shape, come down, and then break out of the neckline. Let me just kind of show you how that would work. So we don't really have one in recent Bitcoin history, but if price is ever trading and it comes up to a line and then it comes down and forms a little cup shape, and then it comes up to that same line again and then forms down with a little handle, usually once it breaks the resistance right here, okay, it's also always best to have it break out with a retest. The way you get your take profit is you just drag this line from the bottom of the cup to the top of the neckline. When it breaks out, that's where you set your take profit, and so you would enter your trade. Honestly, it's best to wait for the retest. On that bounce, set your take profit up here, your stop loss below that support. This is how you would trade a cup and handle. They're not so common on Bitcoin as much as they are with other coins, but this is how you would do it. Then we have a head and shoulders, and again we can do a head and shoulders and an inverse head and shoulders. Let me kind of walk you through a head and shoulders and an inverse head and shoulders. A head and shoulders is something like this, guys, where you would have, let me just kind of show you. Well, first let's take a look at the picture. Head and shoulders is where you have a left shoulder, a head, and then a shoulder. This can be a little hard to identify, but you want to see price printing a mountain peak, and then a higher mountain peak, and then a lower mountain peak, where the highest mountain peak is in the middle, and you want there to be a support line that connects all the heads together. So a good example of this head and shoulders would be right here, okay, right here, where we have a left shoulder, we have a right shoulder, I'm sorry, we have a left shoulder, we have a head, and we have a right shoulder. And you can see that this support line connects them all together, right? And the way you get your take profit for head and shoulders is you take it from the top to the neckline, and you just put it right here. And yeah, we pretty much come down and hit our take profit pretty much perfectly, right? This is how you would trade a head and shoulders. An inverse head and shoulders is just the opposite of that, where you have a upside down head and shoulders, right? You have an upside down head and shoulders. Let's see if we can find one of those. They show up all over the place, to be honest with you guys. The inverse head and shoulders is. Let's see if we can find a good one recently. Here's a good one. Here's a good inverse head and shoulders. Right? We've got our left shoulder, our head, our right shoulder, and the way you trade an inverse head and shoulders is just the same as you would a regular head and shoulders, from the neckline to the top, and then you set your take profit up here, and we hit it pretty much perfectly, exactly as predicted, right? Just kidding. Here's another head and shoulders right here, right? We've got the left shoulder, the head, the right shoulder. Where do we set our take profit? From the top to the neckline. When that thing breaks down, we hit our take profit pretty much perfectly. Let's see what's happening here on Bitcoin, guys, because potentially we could be getting a bullish divergence. Yeah, we did get a bullish divergence here. We got a bullish divergence on the 1 hour. And if we turn on our daily supports here, we can see that actually we're coming above our daily support with a bullish divergence on the 1 hour. Let's take a look at the 3 minute to see what's going on here. Did we get any bullish divergences on the 3 minute? I would say no. We did not. So I'm not really looking to enter that trade there. But coming back to our patterns, okay, let's go back and take a look at where we were trading. You guys get this? The head and shoulders, the inverse head and shoulders, that's how we're going to trade them. Okay, head and shoulders and inverse head and shoulders are actually really good patterns for Bitcoin. They tend to play out really well. You're not always going to get the retest, guys, and that's what's sad, okay? So if it's a riskier move if you don't get the retest. This one here technically did have a retest. If we're going to consider this the neckline right here, you can see that we actually did fall through. And if we zoom in here, you can see that we fell through. We wicked back up for the retest and then continued to drop. So that one did in fact get a retest on this regular head and shoulders. That would have made for a really good short position. This head and shoulders here did also get a retest. You can see if we zoom in, when we broke out, we tried to come back in, we're unable to, got the retest. This would have made for a really good long position. So these are the basic trading patterns that you're going to find. The best way to trade these is to use Market Cipher Confluence. Okay, what do I mean by Market Cipher Confluence? Here's what I mean. Check it out. When you see this head and shoulders forming, you also see, as we're breaking down from the pattern, you see that as you're coming to the neckline, what's happening to the money flow. And we're going to get into this later in the Market Cipher sessions. But notice something. Money flow is coming down. Momentum waves are coming down. As we are coming to the neckline of this head and shoulders, we can see on Market Cipher that not only is momentum coming down, but money flow is also coming down. And if you're unfamiliar with these parts of Market Cipher, we will go over it in later sessions, so don't worry. But for now, just notice that we have a high, we have a lower high on Market Cipher B with these momentum waves. Money flow is coming down, turning purple as we are breaking down out of this thing, okay? If you see money flow turning purple as we're breaking down from a pattern, you know it's going to break down. If, on the other hand, you see money flow starting to turn blue as we come above a pattern, breaking out of a pattern, you know it's probably going to break up. Check out this here, okay? This was a really good head and shoulders. We did have a retest right here at this inverse head and shoulders, but we got another retest right here at this inverse head and shoulders. This second retest, we can see that the money flow has actually turned blue here. But even before that, we can see that as we're forming this inverse head and shoulders, what's happening to Market Cipher? The money flow is coming up. The momentum waves are printing higher lows. Okay, this is showing us that this is going to be a breakout, right? We have an anchor, we have a trigger, and we see money flow curving to the upside. Okay, now again, if these things are a little hard to follow, don't worry, because you will learn this in the market cipher sessions. In fact, I recommend that you come back and watch this video after you've taken the whole course, because a lot of things will probably just click a little bit more if you're totally new. But now that you have exposure to some of these concepts, whoopsie daisy, I'm going to just keep on now going through the session. Now, I think there's something very important that a lot of people miss out on when they're trying to trade patterns, okay? Although it can be a successful way to trade and make some good trades, they're not going to show up every day. They're absolutely not going to show up every day. Maybe you'll get like a nice little triangle, but a lot of times what you'll notice is Bitcoin will end up trading in some kind of pattern where, hang on, let me zoom out. Sorry, guys. Bitcoin will end up trading in some kind of pattern where it will be in that pattern for a very long time. And I'm talking on the macro scale, right? The macro scale. For example, Bitcoin was trading in one of these guys. It was trading one of these things for quite some time back in January, where we were kind of forming this, basically this descending wedge, right? This pattern that we were already looking at. Now, this was a whole month of price action packed into here, right? We're talking from January 5th all the way to the 28th of January that we were inside of here, okay? How are we going to find, if we're only trading patterns when they break out, how are we going to find good trades, in between? Because obviously it was a really great trade. We broke out, we got the retest, we come off to the races. It was a great breakout of a descending wedge. But look at all the price action we could have traded in here. How are we going to trade this? If you notice that price is forming some kind of pattern like this, we can use techniques that we've learned in the past to find areas where price will pivot, right? So let's say, for example, we know that we put in our low here and our high here, okay? And our low here and our high here. What are some things we can start to do? Well, we can start to do Fibonacci, right? We can start to do Fibonacci. As soon as we see that we put in a low and a high, we can pull out our fib. So let's go ahead and do that. Let's pull out our good old fib, and we'll take it from this swing low to this swing high up here. Okay? And this is our fib. And what do you guys notice right away? Here, let me turn on some other levels here. This is not the full fib. Turn on the 382 and the 0.5. What do you guys notice about this? Well, check it out. We get our first trade perfectly off of this 786 level. So if you notice that we're starting to form a pattern now, okay, well, before you didn't know it was a pattern. You just know we had this low and this high, okay? We have a low and a high, which is kind of giving us a general outline of a range that we could potentially trade, right? And we get our first low and high, we pull our fib, we come down, we get a trade off the 786, we come down, we get a bounce off the 618. Now what we can do, guys, is we can continue to pull our fib, okay? Now that we know we're in this triangle thing here, we can continue to pull our fib, maybe now from this swing low to this swing high, right? And what do you know? Boom. We get that perfect trade off of the 618, right? We get that perfect trade off the 618. We come back up, we reject off of our triangle, trend line, which now has 2 touches. Now this is our 3rd touch, right? We're using our fib to obtain these levels as we're consolidating in a pattern. This is a trading technique that will work very well. Now, we can keep doing that, right? We have this high, we can pull the high to the low, and what do you know? We reject perfectly off of our 618 and is also the trend line. And then we come back down, okay? Come back down so we can pull our fib from this swing high to this swing low down here. And what do you guys know? Look at this. We reject perfectly off our golden pocket before we even hit that trend line. Before we even hit the trend line, we get the perfect short off the golden pocket. And I just moved the screen all the way to the present, guys. I'm so sorry. Let's zoom back in here, okay? This is how you can trade patterns while they're forming, right? While they're forming, in some kind of range of consolidation, you can just use your good old fib, right? And then we can take our swing high to our swing low. And here, clearly we don't get a trade. Elon Musk actually tweeted, which did something crazy, which is totally fine. Totally fine, right? Let's see here. Take it from this swing low here to this swing high up here. We get a bounce off the 786. We could have traded the 786 all the way up. There's something else we can do here too, okay? If you guys notice that you have a very significant low and a very significant high, you can look at this now as a trading range. You can look at this now as a trading range. If you have a low and a high, and you notice that now price is consolidating within that low and high, okay? Within that low and high, meaning that the price has not come higher than that first high, and it has not come lower than that first low, you can look at this as a trading range, and you can actually make two lines right here, okay, where you have the high of the range and the low of the range, okay, the high of the range and the low of the range. You can keep your triangle on as it's forming, but what we can do now is we can actually use a fixed range, which I talked about in previous sessions, and we could take it from that low to, wherever we're currently trading at. So let's just say, for example, that we are just trading up to right here, okay? Right here. This is, let's just say that this is the only price action that we have thus far, okay, because we're in history, and we know we put in this first very significant low and this very significant high. We've been unable, sorry guys, my trading view is frozen here. I'm going to have to try and wait it out. Here we go, here we go, here we go. Man, is this going to do it to me in the middle of a recording? I hope not. Well, anyway, while I'm waiting for this, I can show you that, we have now a fixed range in here. And if I have to exit the pages, I will, and then I will reload TradingView. And let's see if it auto-saved for me. Go back in time to that place. Just take me back to a day before this was a job, before I got paid. Okay, yeah, so, again, I don't want to do the back in time thing because it froze my trading view. But again, pretend like there's no price action beyond this point right here, okay? Pretend there's no price action beyond this point. What we have right now is we have a value area high. We have a value area low, right? And we have a point of control. And this can give us more confluence. Again, if we take our fib from the swing high here to the swing low, we can see that we have perfect confluence. Not only are we rejecting off of the golden pocket here, but we're also rejecting off that point of control, right? We're rejecting off that point of control. And so, it's giving us other areas to look for. We have this value area low right here, okay? And remember, we were just pulling this right to down here, okay? We have this value area low, which, by the way, gives us a little bit of confluence later down the road with the trend line, and we do get a nice little scalp rejection off of here where we could have had a move to the downside about 5%, right before Elon Musk tweeted. So these will give us added confluence, right? And we can, as we notice this range happening, we can continue to adjust the range as time goes, right? If price action is only coming up to here, well, then we can see our value area low is currently down here. Here, let's remove the value area, the old value area low and value area high. We can see that we have a value area low right down here, okay, which, interestingly enough, we do get a little bounce off of right here, and then we have our value area high right up here. Nothing too crazy. Nothing too crazy. Although it's interesting to note that the first Elon Musk tweet did take us up perfectly to this original value area high. So basically, I'm just showing you guys different ways to trade patterns as they're forming, to trade triangles as they're forming, wedges as they're forming, ranges as they are forming. Because a lot of times you'll see these patterns and they'll be forming for a month. And you'll see a lot of people on YouTube or whatever saying, look, once this breaks out, I'm going to place my trade. Once this breaks down, I'm going to place my trade. My whole thing is like, wait. Why are you going to wait until this thing breaks out to place your trade when you have 1, 2, 3, 4, 5, 6, 7, 8, 9 trades to make inside this pattern? You get what I'm saying? And again, the way we do that is with fib and with volume. Fib and volume. Let's go to another one. Another famous pattern. A famous Bitcoin pattern that we've been trading for a quite long time. Well, we were trading for a quite long time. And that was this, right? Our good friend, the rising wedge. The bearish symbol that caused Bitcoin to be the world's most coveted asset into being the world's most worthless asset was this rising wedge right here. The start of the bear market 2021. Of course, I'm being slightly facetious here. But here's what we can do. We again can have a little range starting from here, right? A swing low to a swing high. And when we have a swing low to a swing high, the first thing we should always look to do before we even know that the pattern is forming is pull out the fib, right? And what do you know? The first thing we notice when we pull out our dang fib is we get a perfect bounce off the 618, right? That's just how it rolls. That's how Bitcoin rolls, okay? And we get the bounce off the 618, and then we start another move to the upside. And then once we start rejecting off that 618, well, then we can pull our we can pull it from the swing high to the swing low. Okay, I'm sorry. So again, when we first get our initial move and we start to correct, we catch our bounce off of the 618 right here. We get that bounce. We come down, okay, touch our trend line. You could say, okay, where are we going to reject from in the future? You could pull it from here. Honestly, I don't really like that. I would rather pull it from up here now to the low of the move. Look at this, right? We come down, we get the perfect bounce off our 618. We come down, we get the perfect rejection off our 618 up here. And then let's see. You can't pull the fib with every move here, but once we start forming some kind of a range, now what we can do is we can pull out our fixed range. Okay? We've been trading for a while, right? We can pull out our fixed range. And let's say we come up to these candles here. Now we have a very clear value area high. Okay? We have a very clear value area low. We have a very clear point of control right here. Now remember, we're only trading right to this candle here. Look at this. We come up, we reject perfectly off the value area high. We come down, we bounce perfectly off the point of control. We come up to the value area high. It's a slight resistance, and we break out above it. We come down, bouncing almost perfectly off this value area high. In fact, I have a hunch that if we just pull this thing out a little bit more, no, we still have the same value area high. Eventually, we come back down and do bounce perfectly off this value area high and the trend line. So you guys can see that there's just confluence here. There's confluence here, and as we continue to pull this thing, this range, we can see that as time goes on, we get more levels, right? More levels that we can use to trade, and we can use our fib as well to trade as we're consolidating in these patterns. We don't just have to wait until price breaks up or price breaks down. Now, the best trades you are going to get are going to be pulling that fib from a swing high like this to a swing low like this. And remember from the fib sessions that you can pull your fibs from multiple lows to multiple highs, right? So you could pull your fib from here to here. You could pull your fib from here to here to try and get a bounce. Of course, we did not get a bounce there, guys. And you can pull your fib from multiple highs to the same low. So you can pull it from here to here, and then you can pull it from here to here as well. And you can see pretty interestingly that we do respect the 618 level quite well. And so this is kind of how I like to trade patterns. I like to trade them, sometimes the breakout, as long as there's a retest and market ciphers giving us confluence that the breakout is going to happen. But then when I see that we're consolidating in a pattern, I like to then trade within that pattern as it's consolidating, and we can do that in so many ways. Again, back in January, even on the 1 hour time frame, I remember, if we come back to the beginning of January, where Bitcoin was forming this kind of symmetrical triangle that eventually broke down. I remember this quite well. Look at this, right? We have our swing low to our swing high. We pull this, okay? We pretty much get a perfect bounce off the 786. We come back down, we get a perfect bounce off the 618. And then we come up here and reject off of what we now know is a trend line. We can connect 2 points. And then what we can do is, we can pull our fib from the swing high to the swing low. We reject off the 786. We reject off the 618 twice. There's a lot of good trades you can make using Fibonacci inside patterns, and we're going to get more into this later on in the course, in the market cipher sessions and in the trading strategy sessions. But this is just kind of give you an overview of patterns, the breakdown strategy, and also how to trade within a pattern. God bless you guys, and I will see you in the next session.